Huge week for OpenAI, the company closing a $6.6 billion funding round, putting its valuation now close to $160 billion. OpenAI also securing a new $4 billion revolving credit line. Joining us now for what this could mean for the next company to go this round and investors, Axios business editor Dan Primack. It's a huge valuation. The question is how this all resolves itself. When an IPO happens, does an IPO happen? I know there's been conversation, you've written about it, about using some of this money to actually buy out our earlier employees. Where do you think this all goes?
I do think an IPO is inevitable. Now that's not something that Sam Altman and company want to do tomorrow. They obviously value their trade secret in all sorts of ways. They don't like talking too much about what they're doing before they do it. But ultimately, when you're talking, Andrew, as you know, when you're talking about $157 billion valuation, no one's buying this thing. And the handful of companies that could afford to would never get it through antitrust. So ultimately, the out for these investors will be an IPO. And it makes sense for OpenAI. This is a huge amount of money for a private company, but OpenAI is going to need lots more money, and the public markets are the best place to find that.
Well, that was the next question. How much more money is this company going to need? We were talking with Walter Isaacson earlier about just the idea of scaling. You know, typically, the bigger you get, the closer you can get to bigger and bigger profit margins. In the context of AI, at least given the power that's being consumed and the number of chips that need to be bought, and the processing that's taking place, it does not necessarily seem that, you know, the more you add, the bigger the profits get.
Yeah, and there's no evidence that where we get there. It's a little bit like building a giant skyscraper. You just have an enormous amount of work that has to get done before you can really start to generate the sorts of revenue that can overcome that. Because, again, you have the huge compute power for the research. The more people who use it, that includes more compute power. And then the third piece, and my colleague Scott Rosenberg wrote about this yesterday at Axios, is that you have an incredible talent push right now. So to get the researchers you need to compete with Elon Musk. You have to compete with Anthropic, et cetera. That costs an insane amount of money, much more than any other startup has ever had to deal with.
How do you look at what's happened at OpenAI? I mean, one of the other things that's happened, obviously, is a number, if not many of the early founders that participated at the company at the outset are no longer there. It does look like Greg Brockman's going to be coming back to the company later this year. So you're going to have, you know, him as well as Sam there. They brought in a lot of new talent. Do you think that shifts the balance in terms of how this race plays out?
Maybe a little bit. It's interesting from speaking to some of the investors in this round. You know, one of the things I asked them was, you know, venture capitalists usually talk about investing in people. And the people who were at OpenAI when this round began compared to where it closed, as you say, there was some serious shifts there. You know, chief research officer gone, chief technology officer gone. And the answer I really got was, and this is part of the company shifting from the nonprofit to for-profit model from a structural perspective, which is part of this deal, is that they're really moving from a research lab into a product-focused company, and thus it needs different people, or at least the fact that the research lab people aren't there anymore doesn't seem to concern the investors. One of the notable names that's new on this, I think, is Sarah Fryer, who's the CFO. Used to be the CEO of Nextdoor, previously really kind of ran Square/Block with Jack Dorsey. When you think about will OpenAI go public, she's the sort of CFO who would know how to take it public.
What do you think the timeline is for that?
Oh, God knows. I mean, I think realistically, probably within a couple of years. You know, within this deal, there was a promise that OpenAI made to investors that it would complete that transition into a for-profit structure within 2 years. And if they don't do it within 2 years, investors can actually ask for their money back. Right. Would OpenAI actually have the cash to give it to them? That's an open question. But I would think OpenAI should probably try to do this in a couple of years. There's no particularly good reason not to. Every company that's ever said, we don't want to go public because we're worried about our secrets getting out, they've gotten over that pretty quickly, and it hasn't really hurt them. I mean, Google went public. They had lots of secrets. That didn't seem to hurt that company.